And we are live again. Thank you, everyone. Welcome to the next episode, episode 10. Wow, I can't believe it that we made it this far. This is Farmers in Finance. Sorry, I was pulled off stage there by my cursor. My name is Rico, and I'm a realtor here in Penticton. And since I am here in my studio in Penticton, BC, unfortunately today my co-host Gaurav is not able to join us. He's at a wedding. Very nice. I hope you're having fun there, Gaurav, when you see this video. um, Excited about today. We're going to continue today. We're going to continue last week's show, where we ended up at the topic of wills, which actually we are going to do an actual podcast just for that because it's so important. And but before I get started and go on a tangent, always don't want to go on a tangent. Let's talk about today's show. So, the title for today is Seeds, Shields, and Strategy from Life Insurance to the Infinite Banking Concept. So, yeah, we left last week on the life insurance component. So, today's quote of the day is someone sitting in the shade today because someone planted a tree a long time ago. That's Warren Buffett's quote. And that one definitely hits home because it's not just about the present moment. This is about the future. And there's a beauty in becoming a farmer and understanding what it's like to plant a seed and watch it grow. And when it comes to trees, let me tell you, it's quite an amazing feeling. There was this book that I read once. It was The Ringing Cedars of Russia. I keep mentioning it. It's one of my favorite books. It's categorized as a fiction, but I think it's also an inviting and interesting book to read just because it makes you think. And I like thinking a lot. And so the book said that you are co-creating with nature, and it's important to understand what the future is like, because if you can see that seed that you plant today and you watch it grow, it's gonna it's gonna give you tenfolds the feeling of protection. And also that goes with life insurance. When we go day by day, we don't think of what the possibilities are, but to be prepared, it's key to set that tree for we do these finances for our clients. Me and Gaurav always come across like stupor of people not knowing how so little they need, just like a seed, so little they need to create such a huge tree or such a huge impact on their family's future. And for me, that was what impacted me in my life, was about having the proper protection. But it wasn't an easy decision because I have a story, especially when it comes to life insurance. When I was 8 years old, my mother and my father, they told me that my father was sick and he was going to go to the hospital quite a bit. And at the time, you're 8 years old, you don't really have an understanding of what that means. And so I watched the progress of the disease that my dad had, and slowly, it rendered him incapacitated, right? And one day, my grandmother and my mom walk in and they said, "Well, your dad is not going to be with us for a while." At the time, I didn't know what that meant, but over the course of the days, years, and so on, I watched my mom struggle. And later in years, I had learned that my dad had insurance put in place. But at the time, that was like 40 years ago, at the time, they didn't have what they had actually, they had clauses in there that certain diseases weren't covered. And funny enough, cancer wasn't covered as a disease for his insurance benefit. Um, if it wasn't for my grandparents, my mom would have struggled even more. It's not easy to from a stay home mom to go to back to work, especially in Italy, and be able to provide for the family and adjust to the changes and everything like that. So at what I want to get to the story is that at the time when I learned from my mom, I asked, so how come we struggled? What happened? Like, didn't dad have anything in place? And she said, yeah, he did it. And I was like, oh, I didn't know that. And so she said she had a life insurance, but in the life insurance, actually in the contract, it said that cancer wasn't covered. Because obviously, as a life insurance company, I can see both sides. Life insurance, it gets cheaper the least amount of risk it has to take into the coverage. And as we all know it, cancer is a pretty high risk disease, since we're told by the numbers that 1 in 2 Canadians might contract or develop or get. I don't want to get into the doctor part of it, but this disease. So having it that high risk, it wasn't covered. So when I was 16 and 17, I kind of was a little bit of a rebellious kind of kid, and I registered that, oh, life insurance is a scam. And so over the years, obviously that seed grew in my mind, but it actually wasn't a tree that was growing. It was actually an understanding that it was the scam, but I didn't really realize that it was the contract that was unread. And that's the key for understanding life insurance policy, is all about the contracts. And so when we talk about life insurance being a scam or being scared, like, I mean, I get all kinds of rejections on insurance, even if I mention the name. I don't want to talk about it. It's too far fetched, too far ahead. It's like you have to word it in a different way. Oh, I'm not selling you anything. Don't worry about it. I'm just letting you know. I'm the guide. I'm the guy that is going to guide you to the water. But and it's funny because over the years, and now a couple of years ago, I realized how key that is. But see, I had to go through the farming and the struggles of farming, and then I had to understand finances, and I had to understand the flow of money, then to get to the point of, okay, I'm open to hear this insurance thing out. Well, actually, even real estate has taught me a lot about contracts and how to read them, set them up properly, because contracts are powerful things. They're an agreement between two parties or entities, and it's all about the wording, and it's all about what's important for the two parties to do what they are saying to do. So, having said that, insurance is just the same. It's just a contract. Is people, like what Gaurav said in past episode? It started off with people protecting their crops or their deliveries or their shipments. They would take 10 people would get together, pool their money, and if 9 shipments reached that 10th guy that lost his shipment was covered. And so that was the power of pooling together the money And our famous Warren Buffett quote here, he made a lot of money with insurance because he managed to pull money together and invest it and create actions and movement and jobs and everything in the economy. And then he used the insurance component to protect people at the same time and having contract with the people. So to end this story, I learned that insurance, it's more about contracts and understanding them. And so as a guide here, as a financial advisor, as a real estate agent, we're just guides, and we have had experiences and keep having experiences with other people and their problems, and we're just going to guide them through the problems because it's what we do and what we need to do in order to help people out. So, on that tangent, I just want to recap what we talked about last week. And I'm just going to share my screen and get set up there. So last week we talked episode 9. It was about cash flow. So we had our famous family, the Sprouts, Jesse and Lana. And they were a basic family, 2 kids with Oakley and Willow and Oakley. It was last week. Okay. So they just, we were just sitting together. This is what we do at Xperia. We sit down with the families and we just go through a little chat about their finances. And obviously we start off with the age and everything like that. So we left off at the part that was really passionate, and we figured out that we're going to do another show, me and Gaurav, and it's about the will. When I asked the question to Jesse, do you guys have a will in place? And he said, no, we don't. And I said, well, you might want to put one in place. It's not that expensive because people think it's like super expensive to get a will, but it's not. And also what we tell people is to register it with the there's like a few companies, because you never know, right? Like, but obviously you got to keep updating it too, but I was going to say, you never know what happens, who's got to register. The notary might have seen it and signed it off, but then if you don't tell anyone that you have one, when you pass away, then who's going to read it? Who's going to know it's even in existence? So you have to tell a lot of people. And one of the easiest way is to register it online so that you're telling pretty much the world. And there is places where it actually gets registered, and they, once the death certificate comes in, it's filed, they release the will and for exposure and estate. And then there's lawyers that get in there, and that's another talk. But the important is too that a lot of people don't know, oh, okay, I'm going to set up a will. But for example, I tell my clients all the time, now that you're buying a property, now that you're adding an asset into your life, you have to register it. You have to already know, well, who's it going to go to, so that you take it away. I mean, know that it's going to the proper people, and definitely you're not having some guy in a government office decide for you where is it going to go, or at that matter of the state, it could even stay within the state. So 2 things: that protect it from the government and give it to who you want to give it to. So having said that, obviously we're going to make a little sections about that, for doing the will and continuing on with the show. Okay, so we're going to continue today with the life insurance portion. And I asked Jesse a couple of questions, and this is what we ask. in order to get a little bit of a better understanding of where people are at and what do they feel and how they base, their ideas and what they want to see in the future, right? So let's go and take a look. I'm going to share my screen again. I hope you can see this, but I'm going to read it out just for the people that are listening on the podcast, just on their headphones. So we left off. I hope you can see this. I can see it. Um, we left at the will. Oh, does Jesse? Sorry, just gonna get. Oh, here we go. Do you have a current will? He said no, and obviously we said well, whatever we said before. If it were affordable, would you like to have one? Yes, he said. Affordable. What's affordable? It depends how you value the where your assets are going to go. And when it comes to farms and farming and legacy and tractors and tools and investments and all this, it's important who's it going to go to. Like who's going to be able to take care of the funds, who's going to be registered, and where is it going to go. I would definitely not want it to leave it to the government, especially the way I feel about the government nowadays. I mean, if it was a good government, maybe not. Anyways, let's continue to have it on. Oh, affordability. What would a will cost? Well, I paid 20 years ago probably $1,200. I did it with a notary, but nowadays it could even be cheaper. And some insurance plans offer you free will updates, and they'll keep it registered in their files and help you register as well. And free updating, because every time you update it and put another asset on or anything like that, it costs you money. So there's some services out there we can point you out that can do that for us, for you. And yeah, well, and if you want to know more, obviously, just you know how to reach me. I'm not a ghost out there. Do you feel that you are overinsured or underinsured right now? He answered, "Don't know." Well, yeah, it's kind of hard to say if you are overinsured or underinsured. Um, what does it mean to be underinsured? Well, we have basic tools, and we're going to explore it through the results that tells us, what you want to leave. Like, for example, how many years of income do you want your family to have after you pass away? Obviously, if you lived a long life and stuff like that, maybe 2 or 3 are good enough because your kids are out and about. But what if your kids are prematurely? I mean, you die prematurely. So what if that happens? How many years do you want to give your family? Like in my instant, when my dad died, it would have been nice if my mom didn't have to go to work and adjust, and maybe we could have spent more times. Even though to this day, though, I still think that, like the universe is acting in mysterious ways. I say that because I wouldn't be here. I wouldn't be the person that I am. My mom wouldn't be the person that she is. And it's like the analogy of a tree starting to grow. It gets its strength from being exposed to the stress of wind. And I don't know if you ever seen a plant when we were in kindergarten. If you see a plant growing and it has no conditions, like perfect condition, well, who knows what perfect conditions means, but if you grow it inside a pot with the proper amount of water and lots of sunlight and no wind, no nothing, no stresses. You keep it growing. The thing is going to shoot out like straight super fast and try to reach for the light. And sometimes it grows so fast that it wrecks it and it starts bending down and all sorts of deformations. And then that is why, because it's not exposed to wind. The wind is what keeps breaking, just like a muscle, keeps breaking those fibers, and constantly the tree grows outer rings. So the tree grows from the inside. I don't know if anybody knows that, but the tree grows inside, and the outer layers are what supports the structure. So then the outer layers, sorry, no, the outer layers keeps growing out, but what's inside is what's keeping. So the bark is, have you ever seen a tree that it's without bark? It's dead because it can't pull his nutrients, his water up to the leaves for the photosynthesis to take effect, right? So it keeps growing, but the tree becomes strong because it needs that wind to keep stressing it. So I diverged. I told you, Gaurav, I was going to go in tangents. But what I wanted to say is that it's it's the struggles, it's the stresses that make who we are now. So in a sense, yes, that was an unfortunate event, but that struggle made who we are. So having said that, overinsured, underinsured, that's again a question for comfort, how comfortable you are leaving this planet the way you want to leave it, right? So what we talked about last week too, it was about trusts. There's ways that you can leave a large amount of money in a trust and have control of the future for future generations, like passed on. And that's what some of the rich people do out there. Let's get back to the questions. If you were to die prematurely, would you want your family's standards of living to be better, worse, or stay the same? He said better. Well, I said, Jesse, well, that's a great choice. That's what I want to do too. I don't know if you guys ever heard the whatchamacallit, the saying, when you get to a campground, uh, leave the place better than you found it. And I always said, yes, that's how I want to leave this place. I want to leave it better than I'm not saying that I found it in a bad condition. Some women out there might say that, but I want to get it better. I mean, obviously, when you get to a campground and you're just wowed by the place and everything, it's just like, let's leave it better than we found it. Maybe plant that tree, just one tree. Imagine 7 billion people in this world. If we only planted one tree, that's 7 billion trees. What would that do to the environment and the places that you're in? And then that's 7 billion shades, or maybe more. Who knows, right? So better, I think that's similar. That's the same answer that I would have as well. I did answer this question the same way. I mean, obviously, we always want better. We're good people, and so why did you buy your existing plans? For protection, for savings, or both? Jesse answered protection. Yes, when it comes to life insurance, we always feel like the answer is for protection because it is the foundation of our financial house. But a lot of people don't know about the savings component that comes with it. With some, obviously, with some plans, and so what we want to show people by asking this question is also like, hey, there is a savings component, like what we talked about in previous episodes, but we can always bring it back. Is the fact that the infinite banking system. So an out there comment. I want to put that one. That's a great point, LinkedIn user. No diamonds without pressure, and that is true. It's like the most beautiful things are created with pressure and struggles, and we hear it time and time and again with all the stories of people out there that like um, they have struggled. Like, I mean, I'm a big fan of Alex Hormozy or Dent Martel. Those two guys have struggle stories, and it's their, like Chet Holmes puts it, the pig-headed discipline that they had to have the vision of keep going, keep enduring, and keep growing and reaching for that light, reaching for success. Just like a tree, it keeps on going until you cut it or do something horrific to it. It'll keep growing, just like a plant or anybody. Like it's all about growth. Um, that actually, when I was saying those words, I was like, the vision reminded me of the book. Awesome book, and highly recommend it for anybody that wants to start entrepreneurship or even a farm, because it's important to have vision. Think and Grow Rich. If you don't have a copy, I have two personal copies that I would love to share. And just give me a jingle, and you pay for the postage, and I can send it to you. And obviously, I definitely want to get into a mastermind with you once you read it. But anyways, another tangent for later. um, let's go back to the plan. I'm just going to scroll and make it in the center. If you were to consider a change in benefit, what interests you most? Lower cost, more protection, or more savings? Um, Jesse here said more protection. Fair enough. Obviously, everybody has different ideas and different visions. So, but they're all, like they're all plausible. There was no like trick questions in this. Lower cost, yeah, you could definitely lower your cost and and uh, have the same protection or even more protection if you could find it for less cost. Well, maybe we can do that too. And then more savings. Well, obviously somebody might say, hey, if you don't know what what the a life insurance could do and could save you, then maybe you're not knowing that that was possible. So there is a possibility there, and that's the whole point of this show, is to give the possibility and just I want to try to make you think. Whoever's watching this now or in the future, I just want you to think about what it looks like in your life, right? So, when was the last time you spoke with the agent who sold you this insurance policy? Well, Jesse said 5 years ago. And this policy, it tends to, oh, okay, it tends to get under the rug. Um, as I get it too in real estate, most of the people don't keep track. They put a policy in place. Oh, they made the sale. Oh, that's great. Thank you so much. Bye bye. But what I feel it's important and what I want to change and make it better is the follow up, the constant updating, and the constant nurturing. Because life policies are like trees. You plant the seed now and you want to watch them grow. And who better than your financial advisor can give you and watch it grow together with you, right? So, oh, there's another comment here. Thank you for sharing. Oh, you're welcome, Kimfa. No problem. Anytime. Give me a call if you have questions or post your questions here. If you were to die prematurely, do you want your debt paid off? Oh, well, yes, he said. Well, yes, that I definitely don't want to pass it over to my family. That would not be something worth doing. And again, that goes with, would you leave this place better than you found it? Definitely, I wouldn't want to leave my family into debt. So I definitely wouldn't want to have that paid off. Yes, so I concurred with what Jesse said, and I still have to see somebody that said no. Um, Obviously, we're all good people, and we want to do the best for everybody else. If you were to die prematurely, do you want your mortgage paid off? Yes, Jesse said, and I said that too as well. So this is building up a little bit on like, okay, so we are wanting to get all your debts paid off. So that goes also into the question, what about your children's education? Would you like to have that paid for when they graduate? And he said yes. And who wouldn't want it either? Another thing that is never talked about. When I started this business, um, this one shocked me the most because we had an actually a company. It's Everest. It's called, and they have a concierge service where they plan everything, so you don't have to do anything, and it's all included in your insurance purpose. Sorry. So they plan your funeral. They take a look at your will. They have the will registered with them, and they take care of all the callings, the setting up, the taking the body out of the hospital or wherever, and they prepare everything. So when the family is dealing with the loss and mourning, they don't have to think about this stuff. And let me tell you, this is pretty stressful stuff because nobody thinks about it, but the I don't want to say the body, but I said it anyways. The body rots really quickly, so things have to be refrigerated. They have to be put away. I mean, have you ever had a piece of steak that you left out of the fridge? No, or out of the freezer? No. So you have to act fast, and I know this is the tough conversation, but I want to put it as simple as possible. Um, when when you have lost somebody in your life that was really precious, and you have to organize all this other stuff in the background, oh man, it's frustrating and even more stressful. And stress is number one cause of bad health. So why would you want to let somebody else why wouldn't you why would you want to take care of the funeral if there is somebody out there that can do it for you? So when I asked the question, if you were to die prematurely, do you want your funeral and final expenses paid? He said yes, and I said, wow, good job. Yes. um, you don't know how this far goes. I mean, obviously everybody sees GoFundMe. Great, great, great idea, but I feel like it turned a little bit on the sad side because most of the people on there are people that are struggling and haven't got the proper advice on how to protect their family. And don't be a GoFundMe kind of person. I mean, I feel GoFundMe should have been like created for starting up businesses and funding those and create benefits for everyone, but pulling everybody's money together. And unfortunately, that is being used for other reasons, probably because people don't know. So, I mean, if you know of anybody that can benefit from this, please send them our way because we are to help people understanding and gaining that knowledge so that they can protect their family and their future generations. So, if all of these were paid off, so the mortgage, the debt, the funeral expenses, and your children education, how much would your survivor need for monthly income? Oh, I put $65,000. Well, that would be nice. Um, I meant to say $6,500. For how many years would your survivors need this income? He said 10 years for now, starting off at 45. So by the time 55, if they had that income, they would do good. The farm would keep going and they wouldn't struggle as much. Obviously, if you lose somebody, I don't know if you lost somebody in your life, it's not easy. But if there was money involved, it would make it a lot easier to deal with the consequences. If we put together a plan that improves your current plan, would you change it if it went better? And he said, yes. If no, if we put together a plan that will protect your family and it is within your budget, would you get the protection? He said, yes. Well, that's great, right? I mean, if he's able to take action, Jesse here wants to take action. He knows that he has to do something, and so we are able to help them and anchor in his mind, because this is all about mindset, anchored in his mind that he's able to protect his family. And then I said, are you interested in disability, health, and dental or critical illness insurance coverage? Maybe, he said, it depends on the cost. When we look at this, there's three components here, right? Health and dental. Okay, health insurance is when you're alive. So if anything happens, then you got to go to the doctor. Here in Canada, we have health insurance. We have the basics and they're covered, so we don't have to pay extra insurance. But obviously, if you were in the States, it would be a different story. And I actually talk to people that are financially struggling, especially big families, because their health insurance plan is so expensive. It's like having a mortgage on their house. So I talked to one family the other day, well, the mother, and she's saying she's just moving for that reason, because it's too expensive. And as the kids grow, it's going to cost more money. And she said that they're struggling because they're paying like $1,200 a month US just in coverage, right? So these are all living benefits. So dental, obviously, we all know what that is. Disability is, I say, if you have a risky job that if your income stops as soon as you're hurt, then I definitely would get a coverage on disability, because a lot of people don't think about this. And I've done it before. I was a contractor for many years, and I had to adapt. Once I cut myself in the right hand and I wasn't able to use it, so I had to learn everything with my left hand. So I did drywalling, I did electrical work and all that stuff. But I don't wish that on anybody, because that put more stress on the healing side of my right hand, because obviously you tend to stretch it and open up the wound. And if I had the proper care, and I was able to take the time off, then I would have claimed a little bit of disability and be helpful, and then my income would have still come in and all that. But even if you stabbed your toe and your business requires for you to walk distances or show houses or do or take your kids to school and stuff like that, and all of a sudden you can't walk, I mean, all these things have an effect, right? So being with disability doesn't have to mean that you're in a wheelchair or anything like that. It means that having the proper coverage, you can take that time that you need to heal. So I think that one is very critical. And funny enough, let's go to critical illness. Critical illness is this one is a little bit tricky as well, because it's all about certain diseases, and this one is very particular because, again, like when I started this show, is it was about having the proper contracts in place. So what is covered, and you got to go through it and really look at what diseases are covered and make sure that you're covered for the ones that are mainly in your family or possible that can rise from your family. And so that's a good way to take a look at your family history and see what you should get covered for. The basic is five, and then there is companies that offer up to 25 common diseases. This one helps out too because it's in a lump sum. So if you survive for 30 days, you get the full lump sum that you were covered for. Um, well, we decided to create a structure after having this chat, but we'll go into details later on. Is we would have what we like to do is create a mix of every insurance so that you offer coverages for different stages. And once that coverage is not needed, boom, the term ends and you're still covered for the other portions. For an example, have a term 30 rider that covers your mortgage. And but as the mortgage decreases in debt because you're paying it off, then you are going to have more coverage. But after 30 years of amortization, you can finish it and actually you can actually end up being covered for the full amount for the full years, and then it ends, so you don't have to pay into the premiums anymore. So your insurance actually lowers its cost for premium as you're protecting your family. So then there's other points that we're going to discuss about, but this is just the info gathering, and so let's go take a look at the results here, and then would you look at the time? I didn't finish it, Gaurav. You get to put your input as well, but anyways, so in a summary, we summarized that Jesse wanted to get covered 70% of his annual income right now at 96,000 for the next 15 years. And let's be conservative here. If it was invested fully at 5%, that would be a total of $856,157. And he said he wanted to take care of his children's education. So that's amount of $128,494 for its future money. And we talked about it last week about inflation and how does that affect all our calculations. And obviously, it depends on your level of comfort and what your understanding is about inflation. So if you want to increase it, we can definitely do that and put it in the numbers and show you what it would look like. And then we said funeral and final expenses, $10,000. That's just for basics for now. I mean, like I was trying to talk before about what Everest does. They say that just cremating, having the body moved over, put into cremation, and then you collect the ashes, that's $6,500. Just that. That's not including the lawyer costs, the probate fees, the property transfer taxes, anything to do with the move or the funeral setup, the wake, whatever you want to do, the parties, and everything like that. So, I mean, that's just basic cost. What I recommend usually is to take in at least 20, especially if you want to get a plot somewhere. That's even more money. Like, I don't want to get into it too much, but plots in places over 20 years are cost like $50,000 to $100,000. So that's also something to take into account depending on what you want to do and what you want to leave. So here's the summary of what we talked about. And then we did the analysis for Lana. So Lana, obviously, it doesn't reflect the amount. So I probably would have done it a little bit higher because obviously this is on paper, uh, what our income is, but when you're taking care of the kids, you're taking care of the farm, and that income is only reflected under Jesse's. It's not fair enough. I think there should be more coverage or equal, not so much equal, but as in farming, there should be, yeah, I think equal should be equal, because if one component, one important asset, uh, when we talked about, oh, this reminds me when I said that income is an asset. Yeah, your income is your biggest asset. It's what gets you, with the things that you have in life. So without income, you have no assets to build on and to grow. So your income is your number one asset. And I was just listening to that on another podcast the other day, and I was like, oh, yes. So why not protect it? Why not protect your family's income? And so she decided to do the same thing, 70% of her actual income for the next 15 years. And then if it was fully invested at 5%. So the total amount came out to 278. And obviously, if she was to pass away, she would want to cover as well the children education because wouldn't want to leave it to Jesse to deal with it. And again, we have $10,000 for funeral and final expenses. So yeah, we discussed here, but these are the results that we're going to talk about later when Gaurav is here too, because I like his input too. He's got a different perspective as I do. Um, let's go take a look at a little bit of how they answered their debt and how and what we do to organize it all in your mind. Because I don't know about you, everything is all over the place. Oh, I got the credit cards. Oh, I got the car loans. Oh, I got the insurance to pay. Oh, I got this, and what we try to do is consolidate everything and put it all together so that you can see the picture that you have, right? Like your financial picture. And this is amazing, like what it does. And with just a few simple consultation, a few simple questions, you have a clear picture of what it looks like, right? So we have the first debt that they declared is a car loan. So who doesn't have a car loan? Well, some people don't, but good for you. Some people do. So what their payment is fixed, so they're on a monthly payment list. They started paying in 2022, and the next payment will come up November 2025. They get an interest rate of 6% on the loan, and it's a 5-year term. So that means 60 months. They paid the original amount that they agreed to pay in the future was 28,000. So the fixed payment amount was 350, and they still have 18,000 left to pay it off. Is your client paying for protection on this product? And we didn't check that mark. So that's not part of the income. So if Jesse was to pass away, either Lana would have the choice to either stop paying and give the car back or sell the car or whatever, right? And so then she would have to still pay $18,000. And I don't know about you, but usually what you have outstanding, it's what you can get if you were to sell the car. And probably, especially at this time, might not even get that. But jokes aside. So Lana has a car too, as well. She's on fixed payment. She bought it a little later than Jesse, and they pay an interest rate of 7%. And for a 4-year term, so 48 months, and their payment, the original amount was 12,000, and their payments are 185, and their outstanding amount is 7,549. They have credit cards with high interest payments. The interest rates on the credit cards, obviously, it's 19.99 or higher in some cases, and they are on a revolving payment, meaning that they don't fix it; they just do the just above the minimum payment. So they're paying it down, but then when you calculate interest, it keeps growing. So credit cards are a funny beast. So you have to know and understand how to manage them. Then they have another debt is their Kubota tractor. I should have put it there. Oh, I didn't put it there. So this, it would be considered more of an asset because without it, they like when I had the farm, I was like, the tractor is my life. If that thing broke down, I was, oh gosh, what am I gonna do? It's kind of panic, right? So for a farmer, the tractor is the number one asset because nowadays we have to be more productive. We can't just dig by hand because we're competing with farmers that have that. So we need to stay up with everybody else, right? So they have a fixed payment. They have high interest rate, unfortunately, because me and Gaurav talk about this. The tractor is always higher interest because it's higher risk, and so and it's not as a commodity like a car that everybody wants. So there's not as much demand. So they tend to have higher interest rates because of the risk, and but it's also spread over 7 years. So they have 84 months to pay off the debt. They started off with $55,000. Kubota is a good brand, so it keeps you want reliability because, like I said, keep the maintenance of the tractor in the winter time, and then in the summer when you roll over, just be able to use it. That's the key. You don't want it to break down in the summer. So all the maintenance, everything, keep it warm. Keep the battery stored warm. Start it up once in a while. Diesel is better than gas. I had a gas tractor. Gosh, to start it back up, I had to clean the carburetors every time in the spring because gas is a funny guy. But then I did put solvent, all kinds of lessons, mechanical and not. But anyways, yeah, keep well maintenance. Oh, look at that. That's another job for a farmer. So we're kind of like masters in none, but skillful in many ways. Another debt that they have, when I was talking to Jesse, is the cold storage, and they put in a loan for upgrading their cold storage and their irrigation. This is, for me, is the biggest asset that you have, parallel to the tractor, because having your products last longer helps you being able to market them and sell them properly instead of throwing them to the pigs. And so when I started, I didn't have a cold storage, but that was one of the first things that I had to get because I realized that, oh gosh, what am I going to do with this salad? Oh, I'm supposed to cool it. Oh, what am I going to do with these cherries? Oh, I'm supposed to cool them. And then irrigation. Oh my God. I don't know if there's any farmers watching, but aren't you always fixing something to do with the irrigation whenever it starts back up in the spring? Oh man, if you're not, please give me a call. I'd like to know how you do it and what system do you use because uh, I would love to learn on how to keep it, problem free after the winter. And funny enough, here we have, not so good winters. I don't know, like this would be a question to ask Gaurav if you ever had problems with irrigation. I'll ask him next. I'll make a note and ask him next week. So interest rate 6%, so that's not bad through the bank. 6-year term, 72 months to pay it off, 28,000, and fixed payments amount 464. So they have an outstanding debt of 13,000. And any of these, they were not calculated in their protection plan. And so when we are going to come up with a plan for Jesse and Lana, we're going to calculate all of this. Oh, look at that. We got 5 minutes left. Let's go through the mortgage, and then I'll just do my closing points. And if I'm sorry I couldn't answer any questions, I hope that was fully cleared. But anyways, Lana and Jesse have a mortgage, and they purchased their farm at 520. They're paying monthly property tax is 410. The current own value is at 725, so they got pretty good value stored in there. Their current balance is 420, and their interest rate is at 4.5, and they have a renewable mortgage of 5 years with an amortization period of 25. They are smart, and they're doing a bi-weekly payment, and their payment amount monthly is about $1,200. That seems to be. Oh, the payments. Okay, so that $2,600 a month. The payments are bi-weekly, so they pay $2,600 a month. So that's pretty decent for their farm. Yeah, like, oh, thank you. Great session, Rico. Appreciate the invitation. Please add up to your contact list. Regards to Gaurav. Yes, thank you, LinkedIn user. I know you are. Anyways, but yeah, thank you so much. Yeah, so that's it. We went through the show. I don't know if you got anything out of it. Sorry about all my stories and tangents, but it's vital for me to express these findings that I found through farming or through financial services or even real estate at this point. Everything is a learning lesson. We go through life, and what we have to understand is that we're here to learn and to better ourselves, and to make each day better than the one before, and to leave the place that you're in better than you found it. So just a few closing notes. Next week, we're going to talk about this as well. And we're planning more shows, more stuff, more to come. I'm thinking of having a guest that I met the other day at one of my masterminds. And he can give us a little bit of insight to finances and how to be creative with financing land and properties and farms. So I will announce that probably next week once hopefully we're going to finish this. Roll up and see what we have left. Yeah, we did debts and mortgages today. So we're going to do an overview with Gaurav and I about the financial situation. And then we're going to go into the goals and dreams of the family. And then we're going to look at their net worth. And then after that, it's about planning and resulting and what we suggest for this family. So if you want to get in touch with me or Gaurav, message us on LinkedIn. We are on YouTube. We are on Facebook. Just Google our names. I'm Ricardo Mananza as a name, but I go by Rico because that's how my friends call me. That's how I get answers. And if you want to talk to Gaurav, go ahead. He's a great wealth of knowledge. He's a crazy entrepreneur. That's why he's not here with us. He is working out there. And Gaurav, if you're listening to this, we missed you today. I hope I didn't rant on too much. But again, thank you for watching the show. This is Rico. We're Farmers in Finance. We want to create a world of freedom for everyone, because I'm not free until everyone is free. Old Buddhist concept. Thank you again for watching. And until next time, hope to see you here. Same time, same day of the week next week. All right. Thank you so much. Have a good day. Enjoy out there.